Welcome to the Stock Up with Larry Jones show. I'm Stocks with Josh, and I'm going to cover 4 stocks that Larry asked me to go over. One of them is the explosive move of SMCI. This thing is up 160% in just 2 weeks. And then the story of decline of DJT, Truth Social, Donald J. Trump's media company, has been down 40% in really since the election. It had a little pop and then it went back down again, and it's basically down 40% from November 4th. And then HIMS. Now, this one has been very explosive and has had a lot of bullish dynamics pushing it higher and higher. It's up 200% in 6 weeks. So if you've been on the HIM train, you have only been heading to Cash City. I'm going to give you some fresh technicals on all 4 of these. The last one is a bonus one. This one is going to be SERV, S-E-R-V. This is a robotics play that had been a top pick investment for NVIDIA, but ever since NVIDIA dumped its shares, it's been on a free fall. This is down 50% in just a short 2 weeks, actually less than 2 weeks. I'm going to give you guys a quick overview of all 4 of those plays, and I'm going to give you a long idea and a short idea. I'm going to give you the stop loss if you get into the long idea, and I'm going to give you the stop cover if you get into the short play. Again, this is the Stock Up with Larry Jones show. He's a dear friend of mine, and I'm filling in for him. I have my own YouTube page. It's called Stocks with Josh, and you can come over there and check that out for more. I also want to draw to your attention in the description of the video Larry's Stock Up University course. I personally believe it's one of the very best priced courses for everything that it dives into. You've got an overview of options from Keenan Grace. You've got an introduction to charting from me. You've got an incredible breakdown on the cycles and strategies to trading crypto in there from Larry, as well as an abundance of foundational classes for growing wealth. In addition to that, Larry recently launched his investment club. This is something you want to check out. You're going to get plays from Larry, and you're going to get deep dives into what it takes to grow a foundation that you can build generational wealth upon. Larry loves to teach, and he loves to dive into complex things and break them down and make them super simple. Hit that like, hit that subscribe, join this incredible community. It's a very uplifting and positive community. Okay, let's talk about SMCI. Now, this has been on an absolute tear. Why has it been surging? Well, there's some interesting things going on that you guys have probably been hearing about, and it's the fact that they had been accused of some cooking the books, bad accounting practices, so much so that they were in threat of being delisted, and we're coming up on an important deadline regarding that accounting. They have to file by February 25th to be in compliance with the NASDAQ. Now, when I get into the chart, I'm going to tell you my opinion as to whether or not there is more room to the upside on this, or whether or not all the good news has been priced in, and all that's left is that their refiling doesn't go well and the market quickly sells off. I'm going to examine the risk scenario in buying SMCI right now. Remember, their stock has been driven by the AI hype, and yet it's all going to come down to the risks associated with their accounting. So let's go look at the chart, and I'll give you my game plan over there. All right, what is my exact trade plan for SMCI? I think it's pretty simple. These are based on some historic trend lines as well as some Fibonacci lines, and we have pretty strong resistance between 65.90 and 71.60. So I want to highlight that this is an area where the up road for SMCI could end. Now, there is no signal for that at the moment, other than the fact that we are dealing with some overbought conditions. So the momentum is red hot, and when it gets overbought, it can turn around and reverse. Having said that, it also can stay in a red hot place for a while, and price can push higher and higher. We saw that with Alibaba today. So very similarly, if the price breaks above 71.60, then it's cracking into a new fib level And the top of that level is all the way up here at $90. That becomes an extremely realistic target. So I'm going to repeat it. There are sellers here between 65.90 and 71.60. So you could kind of say 66 and 72. There's a bunch of sellers right here that could push this stock down. Now, if SMCI comes out with really good accounting filings and the NASDAQ concern of being delisted comes off the table, then this absolutely can shoot all the way up to $90. Now, you could play rejection candles in this area or a momentum breakout above 72. Similarly, if we break back beneath $55, then this becomes a short play. I like it to go short, which would be seen by playing puts to the downside, and the targets there would be roughly $50 and $45 would be the immediate targets right beneath $55 if we were to take this short. So SMCI's fate has come entirely down to how truthful, honest, and well presented their filing papers are over the course of this next week. And again, that deadline for that is February 25th. They can get it in before the deadline, and it could have breaking news, and the stock could hit that $90 very, very easily. All right, let me know in the comments section what you guys think of SMCI. Let's get right into DJT, Truth Media, Donald J. Trump's stock. And I briefly want to comment on something that Larry Jones has been saying on his page really for the last year regarding this stock, is that it wouldn't do well after Donald Trump came into office. And the basic idea there is that Truth Media would have more strength if he didn't become president, because this is a place where people would have to go to find him and to hear from him. But alternatively, if he became president, well, then he's got the largest platform in the world to tweet and to speak from, which is what we've seen, and that this would cause the reason to value DJT to fall. And that's what we saw in the stock price. But in addition to that, the CEO and the COO know that that could be true as well, because they've been selling the stock right up to the election. In addition to all of that, these guys are losing money. Trump Media and Technology Group reported a loss of $400 million in 2024. So that's not a loss spent on engineers, in my opinion, building a strong company base and a future platform for free speech in America. That's a loss because this is a huge money grab. That's what DJT was. It was just a massive money grab, no different than the Trump coin. I'm not hating on anybody. These are just facts, in my opinion. This is a horribly run company, and Donald J. Trump is not at the helm of it, as some might hope that he is. He's busy being president, and that's why people thought, Larry Jones thought, that the stock would fall off, and it did. So executives are selling, cashing in. I'm sure Donald Trump's been cashing in as well. And let's just go straight into the charts, and I'll tell you guys what to expect based on analyzing the important trend lines, the fib lines, the historic lines. Is this going up or is this going down? Let's go take a peek at the chart. All right, we're looking at DJT stock, and this was the peak right around the time of the election, and you can see that the stock fell hard and crashed, and it slowly recovered but never broke above its previous high, and it's since crashed again. So we're going to keep it very simple on this one. A long idea above $30, that's a critical level of resistance. If we get above $30, then I would take it to a target of $35. $28 is the stop loss, and you can see that it's already broken through that. Short idea beneath $26 for a move down to $22, and I think it would go even further down past $22 and to $18 is where I see this thing going if it doesn't quickly recover above $28. There's your trade plan. All right, we got to talk about HIMS. Now, HIMS has been an absolute rocket. If you've participated in this, you've made a ton of money. As I said, it's up 200% recently. And what is the reasons? Well, they've done a great job running this company. They've had explosive growth. They've done everything right. They recently had huge exposure in a Super Bowl campaign ad that just further boosted their customer base, and when they were doing everything right. In the last couple of years, they added a weight loss treatment, the likes of some popular drugs like semaglutides. There was a huge demand for that. They jumped on it, so it just shows how responsive they are to the marketplace. They basically provide care for men and women. They provide important products like hair care and a lot of other specialty products for products that at some time in the past might have required prescriptions, but in more recent days have not, and they've been able to sell some high demand products into the marketplace. Now, in addition to that, their subscriber growth grew by 44% to over 2 million in Q3 of 2024. So they're basically on the upswing. There's actually a lot of room for this company to continue to run. And what I like about it is the results I just delivered to you, but the management. Sometimes you just have management that's doing everything right. And this is a company that I believe has that type of focused leadership. Let's jump into the chart, and I'm going to give you guys what I think is happening there, though, because based on what I just said, it sounded mega bullish. But here's what I'm going to tell you guys. We got to pump the brakes because it just moved 200% recently. And so I'm going to show you a scenario for a continuation to the upside or for a short-term pullback to the downside. We can profit either way. So let's go look at that chart. All right, we're looking at the daily candles for HIMS, HIMS stock, and wow, what an incredible move. Yes, that says 200.38% from the low, the recent low, barely, I believe it was barely 6 weeks ago. Yep, 6 weeks ago. And I'm going to go through this very, very carefully. First of all, I want to say that yes, this is in an overbought, high trending upward position. And so, yes, it could begin to cool off. We do have earnings February 24th, so next week, and I could see this continuing to pump all the way up to earnings. And I'm going to make it very clear, there is definitely a value to going long above $70.50 for the target of $85, and you would put your stop loss at $65. And so if this crosses back above $70.50, you enter position to go long to 85 by earnings, but you cover your position, you get out of your position if the price drops below 65 after you get in at $70.50. Currently, we are beneath it, so we don't know whether or not we're going to continue in this upward trend. I would suggest that we are likely to continue in this upward trend. It performed very well today, and today was a down day. Now, going short on this, if this does reverse and break down, we would look at taking puts if the price dropped beneath $59.50, and support would be $50. So you can see that the prospects for HIMS going into earnings next week seems very strong. And again, the theme of 2025 has been to hold your winners longer. And right now, HIMS is winning and in an uptrend, and it doesn't seem as if much can slow them down. And the price points that I gave you, $85, is my target for HIMS if we stay above $65 going into next week. So put that one on your radar and let me know if you have been riding the HIMS profit train to Cash City in recent weeks, because it's only been going up. Okay, so for the bonus pick, it's going to be Serve. Now, I recently talked about Serve. Serve was an exciting company on everybody's radar because NVIDIA had put them on the radar. They're a small robotics company, and we are here in the age of AI, and robotics are going to play a big role in 2025 and 2026. But perhaps everyone got to Serve a bit early. And why are we concerned now about Serve? Well, because NVIDIA dumped their position, dumped their shares. And if anybody would know a type of growth scenario to be in, I'm sure it would be the CEO of NVIDIA. And because of that, this stock has absolutely plummeted down 50% in really just a handful of days. Huge red flags. Let me take you into the chart and I'll let you know what the targets are for this one. I did announce on my page that I was not buying the dip on Serve because after that huge red candle down, it told me to wait and let this thing cook to the downside before showing any interest. I'm going to show you where it could go. And for those who might be hoping for a reversal. I'll give you the price it has to rise back above to get back into the bullish lane. Let's go check that out. All right, we are looking at Serve Robotics. We're looking at the daily time frame, and you can see that Serve was enjoying a beautiful trend up for quite a while, ever since people learned that NVIDIA was interested in them and they had access to top technology. But when NVIDIA dumped their shares and everyone learned that the CEO and CEO dumped their shares, it's had a massive fall. 50% from grace. People were buying this just last week for $23, and here we are sitting at around $12. And so here's the important lines that you need to be keeping on your radar. If we get above $14, that would show a sign of life in this stock, and I believe the move would be for a back test of this channel all the way up here at $17. That is your bull case scenario. Remember that if people took risk at $12, they'll be looking to take profit at 17, as that is a pretty strong move. And if you were to go long in this position, remember, I am saying only go long if it crosses back above 14. But if you were to go long, once it crosses above 14, you'd want to have your stop loss in at $12.50. Now, this is not financial advice. I'm sharing with you the trade scenario as I see it in my mind. You need to make your own decisions. This is not a suggestion for what you should buy, sell, or hold. Now, right here, we've got the short. If you want to, if this is going to continue down and break down further, we're going to see price cross back beneath $12. And this is where you could buy puts or you could short the stock. And the target there would be 10 and respectively 8. And so there is plenty of room for this to still come down. So there you go, guys. We've got SMCI waiting on their filing. We've got DJT has only been losing money, and the world doesn't need it if Donald Trump is speaking freely from the Oval Office. We've got HIMS doing everything right, and this thing is up 200%, and you've got the plan. I think it can go higher still, but you always want to run with a stop loss. And then the bonus, Serve. Serve Robotics needs a new catalyst to come back to life. Right now, the threat is to the downside. We could go back and retest that structure at 17, but I think it could face rejection there and some selling pressure there. You've got the lines in the sand. Make sure you study those charts. I did, and that's how I came up with those strategies. So look it over. Let me know in the comments what you think about these plays, what you think about these companies. I would love to see that feedback. Thank you guys for showing up to Stock Up with Larry Jones page. This is Stocks with Josh. Hit that like and subscribe to get more content like this on a daily basis. And make sure to check out Larry's Investment Club, where you can get more information on these types of plays regularly. Peace and blessings. Talk to you later. Bye-bye.